How to spot and trade market reversals in crypto. First of all, we need to understand what market structure is. Market structure is one of the most important things you'll ever learn when it comes to trading. If you have basic understanding of market structure, you would have been able to predict the 2017 crypto crash with ease. By understanding the essentials of market structure, you'll be able to get into a trend early, determine and recognize the trend, and be able to spot when the trend is about to reverse. When you know the fundamentals of market structure, you'll be able to flip your bias from bullish to bearish in an instant. This means that your emotions will not take over when trading, and you will not become a perma-bull or a perma-bear in any situation given. Once you know how market structure works, it's simply very hard to hold on to a bias, because the market will tell you what it wants to do. And by not resisting the principles of market structure, but following them, you'll be able to capitalize on beautiful chart setups. After you watch this video, you'll have a deeper understanding of price action, and trading will simply become a shit ton easier for you. What is market structure? Market structure is the visual behavior of price. Price moves in three directions: a downtrend, a uptrend, and a consolidation period. These are the three essentials of market structure and the directions price will always move in. Downtrend being a bearish market structure, uptrend being a bullish market structure, and consolidation being a period where bulls and bears meet at equilibrium. In a bearish market structure situation, what we are really looking at is price making lower highs and lower lows. In a bullish market structure situation, what we are really looking at is price making higher highs and higher lows. When market structure is currently bearish, for price to continue being bearish, it needs to continue making lower highs and lower lows. That means that price needs to sell off underneath. A recent low, thus creating a trend of lower lows. Also, the recent high needs to hold and cannot be invalidated, thus creating a trend of lower highs. When market structure is currently bullish, for price to continue being bullish, it needs to continue making higher highs and higher lows. That means that price needs to expand above a recent high, thus creating a trend of higher highs. Also, the recent low needs to hold and cannot be invalidated, thus creating a trend of higher lows. During a consolidation period, price is at an equilibrium between bulls and bears, but eventually price will break market structure by going below a recent low, thus creating a downtrend, or going above a recent high, thus creating an uptrend. So what is a break in bearish market structure? That is when the bearish market structure becomes invalidated. The downtrend becomes invalidated when price breaks a previous high. When this happens, we have to consider flipping our bias from bearish to bullish. So now, instead of looking for shorts, we will begin to look for longs. However, if the recent low is broken again, that will continue the downtrend. However, if price decides to make a higher high and a higher low, that is the beginning of an uptrend, and that is when we have to flip our bias from bear to bull. Now we can take two approaches to this situation. One is conservative and one is aggressive. Aggressive will be trying to long the first pullback when price breaks the high, trying to long it right there. This is aggressive because price has not confirmed a uptrend yet. To confirm bullish market structure, as said previously, we want to see price creating higher highs and higher lows. Conservative approach will be waiting for the confirmation, that is, break of this high, pullback, high low, and then a break of this high again, creating a high low. That is a confirmation. So what do we do when price decides to go sideways? Consolidation is when price bounces between support and resistance. In this situation, you can go long on the bottoms, or you can go short on the tops for some nice quick scalps in the consolidation period. Remember this, when price consolidates, we are still in the trend. But when price decides to break a recent high or low, that could mean a continuation in the trend or the start of a new trend. So let's say that price decides to break this high and create a lower high. That would mean the start. That would mean the continuation of the previous trend. However, if price decides to break this low and create a lower high, that would mean the start of a new trend, which is a downtrend. If you are a aggressive trader, you would long the first pullback if it broke the high, hoping that it would confirm by breaking this high right here. Same thing goes for the bearish case scenario. If you were an aggressive bear, you would short the first pullback of this leg, hoping for it to confirm by breaking this one. Also keep in mind that when price decides to consolidate, this is when smart money or the market makers love to create traps, because a lot of less informed traders, they would just buy or sell the breakout. If you see that price decides to let's say if you see price breaks this low but pulls back and breaks this high, that means this move right here was a deviation or a stop run where smart money generated liquidity before the move in their direction, which would be an uptrend. Same thing would be for the bearish case scenario. If you see price break this high, have a trade back down and break this low, this move right here would be a deviation or a stop run, and price actually wanted to trend downwards. So yeah, if you were an aggressive trader, you would short the first pullback. If you're conservative, you would wait for the confirmation and then short each pullback that presents itself. So with that being said, let's jump into the charts and show you some trades in live time. Alright guys, so here we have a Bitcoin chart, the famous 2017 bull run, and you can clearly see that on the daily, Bitcoin was making higher highs and a higher lows. This means that on the daily, we are currently in bullish market structure. So let me ask you this question: when do you think that the reversal was prominent for Bitcoin? If you answered with this blue line, you are correct. Well, let me explain why. If we zoom in to this area, we can see that this high low right here that produced this higher high, my bad, I'm gonna mark this out, HH, or higher high, this higher low that produced this higher high was taken out right here, this impulsive move down. This would have still been bullish market structure if price had continued to break this higher high and created another higher low. However, that is not the case. Instead, Bitcoin breaks this low and then creates a lower high here, signaling for the aggressive shorters to short. Now, if you're a conservative trader, you would have waited for more confirmation. And where would your confirmation be? A break of this low right here. So you can see that first Bitcoin broke this low, created a lower high, then proceeded to break this low and create another lower high where people went short again. So you can see now people are just keep shorting the retracements up, just like how you would long each of these pullbacks right here. Everyone is now shorting these pullbacks up, and that is Bitcoin currently. We can have a series of lower highs, lower lows, lower highs, lower low. But if you're up to date, I'll give you an update. Right here we have broken market structure again to the upside, but it is not confirmed bull run yet. For myself, I think that a confirmed bull run would be a break of these highs and creating a higher low before uptrending and taking out every one of these highs. Currently, we have broken market structure up on the medium term. Let me explain why. So here, market creates a low, lower high, a lower low, a lower high, another lower low, a lower high, and this is the last lower low right here. Watch what happens. Price breaks this recent high and does what? Creates a higher low. What happens next is price fails to create a higher high above here, thus continuing the downtrend. However, it is still not invalidated. This low right here, marked blue, is still not invalidated. So what does price though do? Create a break this high, create a high low. Now it's uptrending because that is confirmed, because this high is now broken, creates a higher low, creates a higher high, creates a higher low, and right here we are trending up. Create a high high, or pull back, create a high low before any clear sign of reversal. Anyways guys, that's it for today's video. If this video was useful to you, please do give it a like, and make sure to comment down below if you would like more tutorials like this. If you do not have a Discord channel, feel free to join ours at Advanced Trading Partners. We have wonderful people who want to help everyone, so make sure to check us out. We also have a VIP group. Here we post market health updates, VIP crypto and forex signals. So yep, that's it for today. Make sure to check us out, and as always, stay safe and happy hunting. Peace.
Choose the sword, and you will join me. Join me.